Broke the story on local homestead tax credit fiasco. Expose the Evansville Redevelopment Commission excessive spending habits.
Your community watchdog. CityCountyObserver.com is your online community newspaper dedicated to the progress of Evansville and Vanderburgh County. We're a nonpartisan publication providing insight into political issues and events that shape our community. We are a watchdog for you, the citizen. Check us out online, city-countyobserver.com. That's city-countyobserver.com.
Tri-State Voices, an open discussion with area leaders on issues affecting communities throughout the Tri-State. Now, here are your hosts, Cheryl Musgrave and Mark Owen.
Welcome to Tri-State Voices, the region's premier political talk show. Today our guest is Alan Presley of American Mortgage Service Incorporated.
Alan, welcome. How are you today?
I'm doing well, thank you.
Great. Tell us about yourself a little bit. And I know you've been in the mortgage business now for, what, about 16 years? Or
It's going on 14 years.
14 years, and you're with American Mortgage. Now, I guess some people probably are a little confused to the difference of a mortgage company or a mortgage lender versus a bank. How does that, what are the differences? What are the advantages?
One of the advantages of going with a mortgage banker such as ourselves is that we offer programs that will allow a borrower to purchase a home with a lower credit score instead of having to wait to reestablish credit or build their credit. So that helps a lot of people get into homes much quicker. Another thing is the program also offers a little bit higher debt ratios, which helps put more people into homes as well. Those are two of the big things that we see that...
Now, one of the questions we always get is some people prefer to go to a bank because they think the bank's going to keep that loan and service the loan, but that often doesn't happen, does it?
Well, there are some banks out there that still service today, but a lot of them are being sold outside of the bank. Okay. So,
are there financial limits to how much you'll lend? Is a bank more likely to do a larger loan or not?
Well, it depends. There's certain type programs that we can go down to lower loan amounts. We just have to make sure that we stay within guidelines of not being what they call a high-cost loan. You can get them done $30,000, $35,000, $40,000 range, okay, where some businesses require $50,000.
But what on the high end?
On the high end, we can do, your any particular loan size. On conventional, we can go above the 417.
Okay. I didn't know if you knew this, Cheryl, but it's extremely difficult to have a client and try to get a loan under $50,000 now.
Oh, you mean a client who's buying their first home, perhaps, or buying another home?
Buying another home. If it's under $50,000, it really gets hard to try to get a loan for a real estate transaction. And that's one of the reasons, I guess, one of the mortgage brokers, although that's not necessarily that you make a lot of profit on those, but that is something that you're able to do.
Absolutely, and the big thing is it makes a client happy, and also the realtors are very happy to be able to see us be able to get the loan closed in such a lower loan amount.
Can we go over why homes that are selling for less than $50,000 can't get financed? There are so many homes in Evansville, yes, particularly in the inner city where I live, that fall into that category. So are the poor being foreclosed from buying a very modest starter home?
Well, one thing you run into, there are some limitations on what lenders can do or will do based upon the condition of the property. A lot of times your lower loan sizes, $20,000, $30,000 ranges. A lot of times you see a lot of them have a lot of repairs that are needed. Although there are programs out there for those type of homes, such as a 203K.
Say that again?
203K FHA loan.
Yeah, which we'll talk about in a minute, because that's really it's a new great method to do some lending.
Absolutely. And then some of your banks just don't want to get involved with your lower loan sizes.
I guess the service fees and the profit on those are so small that they don't make a lot of money on them.
Absolutely, and a lot of your banks, you'll find they're profit oriented, and if they don't make a lot of money on those particular loans, they'd rather not deal with those. And
so in order to get a loan, we would come to a mortgage company such as yours?
You can, yes ma'am, and depending on the situation, there are loans that we can't do if they get too low because of the high cost rules and regulations that are out there today that are involved with doing those lower loan amounts.
So talk a little bit here, maybe like 1, 2, 3, 4, 5, the different type of loans. We have a regular standard 80-20 mortgage loan, okay?
Do we still have those?
Oh yeah.
Is it all 80-20, and that's 80% loan, 20% down for a house, right?
Right.
Well, when I bought my house many, many years ago now, I think I had to pay 5% down, and even that was tough to come up with.
Yeah.
So.
Well, that's what we're getting, the different types. Now then you have also, when you get to that 80-20 or any type of loan, you either have a fixed or an adjustable with a fixed rate over a period of X number of years, however many years.
And that's a fixed rate of interest on the loan, right?
Absolutely.
Or the adjustable, which would fluctuate.
Right, absolutely.
And then in addition to your 80-20, what are the other types?
Well, there are
options?
There are the programs out there that FHA, a government loan, which is an awesome loan, they only require 3.5% down.
Oh, wow.
Good.
Even I might be able to afford a
Which
house.
is an awesome way for a young couple or first-time home buyers to purchase their own first home.
Is that restricted to first-time home buyers?
No, not at all.
Okay.
And now another option there that we do also have, the USDA, which is a beautiful option for people.
How much down on that?
Zero down.
Zero down.
Oh,
Zero
are we
down.
going back into the days of predatory lending?
No,
No, ma'am.
Why
This
are we
is,
giving 0% down?
It's a government loan that will help people. You have to stay within a certain income range for the household. And,
So it's lower income.
Well, not necessarily lower income. Per county, there are restrictions. Like Vanderburgh County, in that area, I think, if I'm not mistaken, it's like 72,000, somewhere close to that.
Okay.
They readjusted some of those. So,
And it has to be in a designated area outside the city, out in the rural part of the county only.
Why would we be pushing loans for non-urban?
Those are their policy. That's their
criteria.
policy.
Okay.
that's the criteria.
And they have a map on the site USDA.com, I believe, and it'll show you the area that is the USDA area that qualifies for a zero down loan.
Absolutely. And in Vanderburgh County, or northern Vanderburgh County, Armstrong, German, and townships are two of the areas. But when looking for homes in these areas, if you find the property address in either of them, feel free to call us. We can look that address up to make sure it is in a USDA
Now this
community.
201K, this is an interesting type of loan that's fairly new. Talk about that. Explain what that's about.
Well, the 203K program, what that will do, it'll allow borrowers that find a home that has repairs that are needed to get in and they have a streamlined 203K, $35,000 worth of repairs or less that you can get work done after you close on the loan, and they give you so much time to get the work done. And of course you have to have contractors, licensed contractors, to do each
So in other
thing
words,
that
you
is
get a
required.
loan for say $60,000 on the house, plus $35,000, and repairs,
Absolutely.
then that enables you to buy a fixer-upper, or a foreclosure, or any other type of distressed property, and get into the house a little cheaper, but then have money to fix it up.
Absolutely, and there's so many different different things you could do on that program. Now, anything $35,000 or above, repairs needed, above $35,000 is a full-blown 203K. And so there's different things you can do on a streamline as opposed to a full-blown 203. There's less things you can do, no foundation changes or anything of that nature on a streamline. But if somebody comes in, they wants to get new kitchen cabinets, new countertops, new flooring as far as tile or what have you.
What about appliances?
Appliances you can do also. So there's just so many different things you could do to improve the look of the home and finance it within the loan itself.
All right. Well, we dove right into the intricacies of financing a home. Let's take a step back for a moment and talk about the housing market in general. We all know that things were going extremely well for the housing market right up until about 2007, 2008, when lending practices and bank practices caught up with the world, and everything fell off a cliff big time. Housing sales dried up. You couldn't get a loan for anything anywhere, and that situation persisted, I think, for a little while. Are we coming out of that now? Is it a new day now, or are we just slowly going back into the type of market that we had before, the type of loan products that we had before? Tell me a little bit about how our home buying landscape is changing.
Okay. Well, shortly, like you were discussing, shortly after the foreclosure crisis, several years back, the guidelines changed a lot. They got tighter.
And whose guidelines were these?
These were the home lending guidelines, Fannie and Freddie guidelines that changed, and
I guess they were federal guidelines, and then bank guidelines to reflect that.
And then you have investors who have what they call overlays on their off the other programs, and it made it very difficult for buyers to get homes without having to go through a whole lot of paperwork, a lot of documentation, down payments. So what we're seeing now is some of the investors and some of the banks are loosening up their guidelines just a little bit, and I feel within the next year or so we're going to see a little bit less stringent guidelines. They're going to loosen up a little bit more is what I'm
well, I heard that Janet Yellen at the Fed is talking about raising interest rates.
Right.
So we're at historic lows. We're around 4% still?
Yeah, well, it's between, it depends on the person's credit score.
Right.
But 3.6, 7, and
3.7 to 4, depending on the program and the credit scores. Credit scores now.
Good rate.
It's not like it used to be. Somebody call in and say, "Hey, what's your rate today?" and how much do I have to put down to get this? But now it's a little bit more sophisticated. You have credit scores involved, loan to value is involved, in getting scores. So in getting a rate. So. You can still get a decent rate right now, around 4 or a little less.
What effect do you think that the Fed change will have? And I know that they're promoting this big change for sometime later this year, but that, it could always be a different circumstance by the end of the year, and that might never materialize, or it might materialize sooner. But what effect do you think that will have on borrowing for housing?
Well, what we're beginning to see over the last 30 days or so, we have started seeing a trend of rates climbing just a tad, and I feel as we move forward we're going to see that trend continue. Of course, it's just like everything, we might see it drop a day or two or a week and then it goes back up, but overall I feel like the overall industry you're going to see the rates climb to some degree.
Are you seeing the number of loans on the rise, or pretty steady, or
Well, we've been seeing a big increase in.
Oh, you have?
Oh, yeah, in applications. We're still getting a lot of borrowers. We're beginning to see a lot more of the moderate credit score borrowers.
What's a moderate credit score? Give us an idea.
You begin to see a lot of your bank guidelines, every bank's different.
Just generally talk about credit score.
Okay. And a lot of times your credit score with most banks, you have to have at least a 660 with banks. With us, with mortgage banks and mortgage brokers, you'll see we can go down to 640. And then we have investors that we work with that will allow us to go down even further. 620.
What's the absolute lowest? Are there ever in the fives?
Yes. As a matter of fact, we at American Mortgage, we have investors that will allow us to go down to 580.
All right. Now, I spent 6 years working for a lawyer who does bankruptcy work. Mm-hmm. Why would we ever want to loan money to somebody with a very poor credit score for housing?
Well, there's a lot of stringent guidelines in that 580 that we have to take into
account. If they can buy a house and get if someone with a low credit score of 580 could purchase a house, in all likelihood their monthly payment's going to be a lot less than renting.
A lot of times we see that.
Yeah.
And people say, well, 580, that's a really bad score. There's a lot of times you do see people, bad things happen to good people. And sometimes you get situations that causes someone's score to drop drastically, especially if they go through a divorce or a situation that
Do you see a lot of these lower scores because of medical cost?
There are some medical situations, some of them which result in bankruptcies. Mm-hmm. There are all kind of different things that will affect a person's score, but a lot of times the medical is a big thing we see. And then people who lose their jobs, they might have great pay history on everything they own. But over a bad situation happens, they lose their job, and all of a sudden you start seeing late payments, which will affect their scores. Mm-hmm. And so we see a lot of different things, or variables that cause people's scores to drop. And those are the kind of people that I like to be able to help, people that have had difficulties, and still like to get them put into a home as long as they can qualify and stay within the guidelines of these investors that will allow us to go down to those lower scores.
So what I'm hearing you say is that the real estate market is either in a boom time or just approaching a boom time.
I feel it's still going strong. Now, in talking to a lot of different people, inventory is tightening up around the area.
Greatly.
Oh, really? Do you have a percentage for that?
Yeah.
Martin might be able to elaborate.
I should have looked that up, but the inventory is much tighter than it has been, and there's not as many homes on the market right now.
All right, so if you had a home to sell, maybe putting it on the market now would be a good time, perhaps better than in the previous couple of years, because there are fewer houses on the market to sell, and there are more buyers. Here.
Well, depending on the county, I can tell you that a home, I believe it's between 100 and 200,000, for instance, in Warwick County, that goes on the market. The average length of sale would be 30 days.
Oh, so 30 days, you put it on the market, 30 days later, that house is sold.
If it's appropriately priced and
wow.
Is a nice house, and the house is in good shape. In Vanderburgh County, it's a little longer, a few days longer. I think it's maybe 30-something. The percentage goes up just slightly in Vanderburgh, but really, if a house is appropriately priced and in good condition, I think the house is going to sell.
Sounds like more people want to live in Newburgh than they want to live in Vanderburgh County?
Oh, not necessarily. I think it depends on the person. It depends on the... obviously, Warwick County has a lot of people moving into it.
Yes. Mm-hmm. Well, they have a lot of positives in Warwick County.
Mm-hmm.
Absolutely.
I think both counties have a lot of positives. And Southern Indiana has a lot of positives, so... What, I guess one of the questions I'd ask you was, it's not to your benefit to help someone get a loan that you think's going to default.
Absolutely.
I mean, you want to make
Definitely.
sure that they're going to do their best.
Absolutely, and that's why during our the underwriting process of a loan, we make sure that all guidelines are followed, and a lot of what we call.
Give me an example of a guideline. Tell me. Pretend I'm a first-time home buyer, and I'm coming in front of you. This is my very first loan. I've got a pretty good credit score, but it's not great because I'm young and I haven't had a lot of experience out there. What am I going to need to bring? What do I need to tell you?
Your life history.
Life history. Well, it'll be short.
Absolutely. A lot of the things that we're going to require are like the last 2 years tax returns with all W-2s or 1099s, 30 days of most recent pay stubs from your employers, 60 days most current bank statements. And what we're finding there, I always tell everybody that during the loan process you're going to have homework. And what I mean by that is, and what a lot of people I'm finding are getting frustrated about during this process is having to document bank deposits on.
Why do you have to document a
bank
bank deposit?
Well, because they want to make sure that every deposit, if there's any large deposits, they would need to know where that money comes from, because they want to make sure, part of the guidelines, they want to make sure that you're not borrowing money to purchase a home, number one.
Borrowing money from like a friend or
A friend,
family.
and our gifts. You can get gifts on loans from a relative, but they have to be true gifts.
Okay.
And you see that they want to make sure that the money that you're getting is actual money that you
can use to support your loan.
Absolutely.
Okay.
And a lot of what we find, a lot of people, they have that stash at home, mattress money as they call it, and they want to use that
Stashes of money at home.
And they want to use that.
This is outside
money.
my field of experience, so.
Yeah, and they want to use that money, but it has to be what they call sourced in season for 60 days, and they can't use that money unless it is. You can show where that money came from.
So you can't travel on airplanes with large amounts of money, cash money, and you can't walk in and get a mortgage with large amounts of cash money.
You can't buy a house cash.
You can't buy a house cash?
Well, you can't. Literally, I mean, if
not that it's going to happen to me, but I'm startled.
You could buy it cash. I guess I should. You could buy cash. You can't hand them cash.
Really?
No, you have to. In order to complete a real estate transaction, you can't use a check. You can't use cash per se. It has to be a wire transfer if it's over $10,000.
It's a whole new world, isn't it?
That's one of the regulations that sometimes is kind of tough, because you're right at the closing, and
somebody hands you a bag of money and it's all over.
You know, they don't take cashier's checks. It has to be a wire transfer.
That's amazing.
If it's over $10,000.
So government regulation plays a paramount role in the purchasing of real estate, is what you're telling me.
Well, yes, guidelines from Fannie and Freddie, guidelines on mortgage lending today have tightened up, and that is one of the things that I try to let people understand when they come in to get a mortgage, that they need to understand that they got to help us during this process and be willing to give us the documentation that is required.
Well, I know that everybody doesn't know our dear friends Fannie and Freddie, so tell us who Fannie and Freddie are.
Fannie Mae and Freddie Mac are the mortgage, what we call the mortgage gurus. They behind all of they back all the mortgages. And
that's a government program, right?
Yes, ma'am. The government has Fannie and Freddie. And then you got the smaller, like Ginnie Mae, and there's just so many different ones, but Fannie and Freddie rule the...
And these are all behind the government's policy of supporting home ownership and helping people get in the position where they can buy a home and live in a home.
Absolutely.
So let me do a recap here. If you want to buy a house, your eligibility to get a loan would be if you have 2 years on the job, right? 2 years work history.
Right.
If you have, you meet a credit score requirement, and you have no judgments, generally those 3 requirements would enable you to get a home loan.
As long as everything else falls in place and ratios, yes.
Okay.
Absolutely.
So those are the 3 basic rules.
Now, in our family, we have a big fight saying that it's not wise for a young person to buy a home, that the homes, especially in this area, appreciate very slowly, and a young person ought to concentrate on building a little bit of wealth before taking on a burden of a home and all of its repairs and so forth. What would the marketplace have to say about that?
Well, I can talk more about appreciation. That really depends on the area. There may be parts of Vandenberg that appreciate much greater than other areas, or in Warwick County you may have areas that appreciate a lot faster. So it can be a real good thing for a young couple to buy in an area that would see a fast appreciation and be able to walk away in 3 years and make 30, 40, 50,000. And that happens. And it just depends on the area and what type of a deal they got when they went in and bought the property. And you see that a lot, don't you?
Absolutely, a lot. And, you know, I think it's a good investment. You said something earlier about rent. A lot of times you can buy a nice home and you get a younger couple that sometimes they can buy a nice home and pay less than what rent is today, with the way rent has gotten over the last couple of 3 years, and still get the benefit of home ownership. And so I think it's, and we're seeing a lot of younger people going out purchasing new homes because they feel it's a good investment for them and a much inexpensive way to live instead of paying the higher rents.
Well, Mark, I know that you're involved in the real estate business. Is there any part of the area that is hot and really a go-go market?
Well, in Vandenberg County, you'll see that the far north side, a lot of new construction, a lot of new areas. I think that's right now a very good area to buy. Time's getting a little close here, but anything major on the changes coming down from HUD in August?
Well, it's going to be a whole new ball game coming to the what they call the good faith estimate in the way that we can close, and we have to be able to disclose the settlement statement 3 days prior to closing now, to make sure that the borrower is aware of what they're getting into and what they're signing, and know everything about their terms.
We could probably go on for another half hour easily. Alan, thank you very much. Cheryl, good to see you again. We've enjoyed the opportunity to be with you. This is WTSN, and we can be seen on various different stations, and you can refer to the WTSN guide, or go to Woods and Woods, and you can pick it up on YouTube.
And like us on Facebook. We're on Facebook too.
Like us on Facebook. Thank you very much. We'll see you next week.
This year in the Tri-State, 1 out of 8 people will be in an accident.
Would you know what to do?
Pain and suffering, lost time if you're working.
When you call Woods & Woods, you are not a statistic. You are our client, and we will fight to get the money you deserve.
If you're in an accident, call Woods & Woods if you want justice.
If you've been injured, call 1-800-544-2108.
Let Woods & Woods work for you. You don't owe us a dime unless we win your case.